Hello, StockFox family. I'm StockFox, and welcome back to my channel. Today we're going to be discussing Robinhood. But before we get started, I'd just like to thank all my viewers and subscribers out there who have supported me along the way. We are a fairly new channel that has had a tremendous amount of success in a very short period of time. Please consider supporting my channel by liking and subscribing, and also consider becoming a Patreon member by going to my homepage. Now, let's get into Robinhood. As you can see, we're going to we're going to do a little backstory on Robinhood here and its founders. It says here, Robinhood, our story. Those two gentlemen there in the photo are the founders of Robinhood. Robinhood's story began almost a decade ago at Stanford, where Baiju and Vlad met as roommates and classmates. After graduation, they packed their bags for New York and built two finance companies selling trading software to hedge funds. With their newfound experience in the world of finance, they realized that the big Wall Street firms pay effectively nothing to trade stocks, while most Americans change commissions for every trade. They soon decided that it was more important to build products that will provide everyone with access to the financial markets, not just the wealthy. 2 years after heading to New York, they moved back to California and built Robinhood, a company that leveraged technology to encourage everyone to participate in our financial systems. Now, that's just a little backstory there on these two gentlemen. So let's take a quick look here at their mission statement. It says right here that Robinhood's mission is to democratize finance for all. We believe that everyone should have access to the financial markets. So we built Robinhood from the ground up to make investing friendly, approachable, and understandable for newcomers and experts alike. Well, if you ask me, I'm not a person, I don't actually own or I don't have an investment account with Robinhood, but I do have family members that are. And I've taken the liberty to ask them, what type of investment platform is Robinhood? And to be frank with you, everyone basically said that Robinhood is a great investment platform for new beginners. And I even have some family members who have been who's been investing for quite some time, and they actually love it. So the feedback that was given to me was pretty good for Robinhood going forward, at least from my family members. If you guys basically have an investment account with Robinhood, please let me know down in the comment and what you think about it. Now, we're going to go ahead and get into Robinhood here, and we're going to find out a couple of things about Robinhood. One we really want to know is why is Robinhood insiders selling their stock? And is Robinhood a good investment? Let's take a look here. So it states here, just to continue giving you a little bit more backstory here on the stock as we come forward, Robinhood IPO'd and what you need to know. So IPO stands for Initial Public Offering. Now it says on July the 28th of 2011, Robinhood sold shares in its IPO at $38 per share ahead of its public debut on the NASDAQ on July the 29th, raising close to some $2 billion. Now, the company, which will trade under the ticker symbol HOOD at the time, sold 52.4 million shares, valuing the company somewhere in the neighborhood of $32 billion, which was slightly lower than the forecast. Now, if we take a look here at the chart here on the screen, you will see that basically on July the 30th, the stock was pretty much at $35.15. Now, you can see the rapid ascend here to where the stock basically ascended here and peaked on its max at $55 at that time back on August 6, 2021. The stock was pretty much flying high at that time. So if you owned it, you was probably smiling. But what's to come is basically the stock's rapid descent, which is that as quick as it went up, it started to come down. So it looks to me that that particular evaluation did not quite hold up for Robinhood. So if we take a look here, that this particular stock has fallen since its highs, practically 79 and a half, let's just call it 80%. So this particular stock, since its highs back on August the 6th, has basically come down some 80%. Now, the question is that is it warranted that this stock sell-off in the descent of this stock some 80%? Is this a fair evaluation of where the stock should be, or should the stock be higher? Okay, is it oversold? Is it in oversold territory? Well, we're going to dive a little deeper here and find out exactly why Robinhood stock is basically headed in the opposite direction. And is it time to buy the stock? We show here that the 52-week low for Robinhood is $9.93 on an intraday. Now, we know that the stock hasn't dipped below that, so we're going to say that that's probably a good indicator as to where a bottom might be when we are looking at a stock like Robinhood. Now, I previously owned Robinhood and I have since gotten out of the stock, but I'm looking to get back into the stock to trade it again. So let me just kind of give you an idea of where the stock was and what my thought process was back on March the 14th of this year. The stock was trading at $10.65. And I started to look at it. I was watching CNBC and they were on there talking about the stock, and it was in free fall. Well, I started to engage, and I says $10.65. I started doing my homework and research, which each and every one of you should do, because you always want to basically, even though you're listening to me right now, you always want to validate, you always want to be validated by doing your own homework and research. And the reason why I say that is because don't leave it up to someone else to basically make a decision or a judgment call on a stock on your hard-earned money, okay? Because anything that I say is not a suggestion for you to buy, sell, hold, or trade any stock or asset. So let's take a quick look here. So the stock was trading that day at $10.65 on March 14th. Well, I didn't get in then because the stock was pretty much a falling knife, right? The question about a falling knife is that, I mean, do you catch the knife when it leaves the table? Do you catch it midway, or do you catch it at the bottom? Well, most people say just leave it alone altogether. Well, the thing about the stock market is that we get the opportunity to decide, right? Because sometimes trying to call a bottom, well, I haven't been able to do it, and I've been trading for years. I don't know if you have or not. So sometimes we have to do what we call DCA, which is dollar cost average, right? We evaluate where a stock is. We determine whether or not it's in oversold territory or not based on a lot of key factors. And then we make a determination as to whether or not it's going to be a good sound investment to basically get into that stock. So at that point, the stock had free fallen all the way down to $10.65. I didn't move to get into the stock because honestly, I thought I could own it much cheaper than that, right? Because as I showed you before, $9.93 back on the other chart was its 52-week low. So I'm thinking, well, based on where the stock market is, all the negativity in the marketplace, surely I can probably get this around $8, $9. Well, that didn't happen. The stock started to actually move against me and move up. So I quickly legged into the stock and bought a nice block of shares at $11.04. Now, why am I telling you this? Well, I'm telling you this because just because a stock basically in the marketplace and there's a lot of negativity coming from shows, investment shows like CNBC and some of the rest of them out there, doesn't necessarily mean that you can't make money with a stock. There's three different ways that you can invest. You can do it as a day trader, you can do it as a swing trader, okay, and you can do it as a long-term investor. You have to decide which one are you going to be based on that investment. Every investment is totally different depending on what it is you're trying to accomplish. What's your entry point on the stock and what's your exit strategy, okay? And in this point, my entry point was $11.04 on that day. I was looking to buy even more shares of the stock if indeed it basically retraced and started to go lower. The stock did not retrace. In fact, the stock basically moved at that point as high as on this day right here. As you can see, the stock moved as high as $15.91. That was a nice move for me. I had a decision to make. I had already made more money than I anticipated. My exit strategy on the stock was to get out around 13. Okay, so I didn't need it to go to 15 to get out, but now we're facing almost $16 a share. What do? Do you sell the stock? Do you put a stop loss on it, and just sort of let this thing ride? Right? Well, I didn't put a stop loss on the stock. All right. I do encourage you to use stop losses if you're new to investing. Okay. If you're seasoned and you understand what you're doing, all right, then it's okay to not put a stop loss on, because sometimes a stock can stop you out and then basically and go higher. Okay. So, and then you can miss out on a big run. In this case, as you can see the chart as I'm looking at it, there was no big run to come. The stock basically started to move against me. So as the stock moved against me, right in this area right here, I basically had to make a decision. And I made the decision at that point to get out of the stock, okay, which is at $13.51 a share. So you're probably saying, well, why didn't you sell it at its peak? No one knows that it's at its peak, okay? So that's why you have to basically, you have to do your due diligence and you do your homework, and you have to make a calculated decision at that time what it is you're going to do to either stay in or get out, okay? Remember, I said you're either a day trader, a swing trader, or a long-term investor. Options is another thing and another video for another day. But those are one of those three things that you are going to have to decide when you're basically buying a stock like this. I knew when I bought Robinhood, I wasn't going to be a long-term investor. I was in it to make a quick buck, and I intended to get out of it. Now, it would have been nice to get out of it at its peak, but it didn't happen. But if I take a look right here, where I actually did get into it, right? Well, don't feel so bad for me, because if you take a look at where I got out of it, I still made almost a 32% return on my investment based on where I got out of it at. So call me a day trader, call me a swing trader, okay? But one thing you won't call me, and that is that you won't call me the guy that didn't make money on the trade, because I certainly made a nice amount of money on the trade and got out. And I'm pretty happy and comfortable where I got out of it at. Now, the real question here is that right now, where the stock is, as you can see here, at $11.24 as of close of business on Friday, April the 8th, and after hours, as you can see here, went up to 11.34. Is it time to buy back in? Because again, me buying over here at $11.04, the stock is almost where I initially purchased it at before it had a nice run up, a 30% run up, where I was able to get out. Okay, if I'd have got out at its peak, it'd have been closer to 50%. But in this case right here, the stock is definitely retracing all the way back. And now the question is it time to get back into this particular play? And I say that it is, okay? I say that it is based on this particular chart that I'm looking at here. We can see the stock pretty much consolidate. This is a 6-month look back period. We can see all of the consolidation that took place before the stock spiked and went back up. Now, the stock is back down again, coming back down to its lows, pretty much its 6 months lows here, just shy of it. Now, I'm thinking here, should I leg in? Dollar cost average starting now? Should I wait for a larger pullback? Well, one thing we know for sure, the market's going to open tomorrow. It's either going to do one or two things. It's going to go up. It's going to go down. Well, it could basically, consolidate and nothing happens with the stock. All right. I don't want to miss the run up here. I don't think that Robinhood is worth $55 a share, but I also don't think Robinhood is worth $11 a share either. Okay. So I believe that Robinhood is worth more than that. So I'm going to be taking a strong look tomorrow morning when the market opens up, and depending on where the stock is, if it's down at least anywhere close to $11, I'm definitely going in. I'm going to definitely take up a position in the stock. And so I'll be interested to see when the market opens tomorrow whether or not this stock actually takes back off toward that $15, or if it basically retraces lower. But either way, I'm going to be getting into this play here, especially if it's going lower tomorrow. Okay, so let's take a look here at at some as to what some of the Wall Street analysts are saying. If you looked at any of my previous videos, you probably know how I feel about analysts. I think I made some comments about analysts before, that there is no accountability for an analyst to pretty much say and do anything they want. I mean, they can practically just get it wrong, and in most cases they do. Okay, there is really no accountability there. And I'll give you a good example of when you're listening to analysts and you're trying to get a feel for, is there some consensus around what the analyst is saying? Well, here's an analyst right here from Morgan Stanley, and it says Robinhood stock has long-term potential, but challenges remain, says this particular analyst from Morgan Stanley. And I'm just going to read just a small snippet of this right here for you here. It says that the rise of the user-friendly mobile trading app and websites, plus the introduction of commission-free trading, has resulted in two significant developments. Now, for one, it has shown that there's real appetite for do-it-yourself investing. Secondly, it has also piqued the interest of a whole new group of retail investors, and this has proved a real tailwind for Robinhood. Okay, which we all know that Robinhood makes a lot of its money off of attracting a lot of the meme investors and the younger retail investors based on their platform. Okay, so again, that's Morgan Stanley. Now let's take a look over here at Goldman Sachs. Goldman Sachs says, got it right on Robinhood. Sell your hood stock now. Two different analysts, right, from very reputable institutions, both saying two totally separate things here, opposite of each other. So the question is which one is actually right? Now let's take a quick look here. It says Robinhood Market says the stock dropped by as much as 67 cents or 5.5% in pre-market trading on Friday after Goldman Sachs declared it a sale just 9 months after its initial public offering, IPO. And it says investors should follow that advice. The question is should we? Should we actually follow the advice of two analysts giving two totally different opinions about this stock? All right. Well, I believe in doing my own homework, and once I do my own homework and due diligence, I start to feel a little bit more comfortable. It's not saying that we shouldn't listen to what analysts have to say. After all, we have to respect them enough to know that they do their jobs and they do their due diligence. Now, how they come up on two opposite ends of the spectrum in regards to whether or not to sell or buy a particular stock or asset here, that part I don't know. I love to get the two individuals in the room at the same time and get their points of view on it. But that's a thought for another day. So let's take a look here at Robinhood. So some of the things here that I take a look at here is I look at, especially when we go into earnings and when Robinhood gets ready to report at the end of this month, I like to see who's selling, right? And when I say who's selling, I'm talking about like the directors, the officers within the company, is what type of insider trading selling that's going on. So as you can see right here, 3 months in here, it looks like the number of shares bought is a little over 2 million, 2.2 million to a 12-month look back of 1.3 million. Okay, now this is insider trading here on Robinhood. Now it says the number of shares sold. We're looking at 145 million to basically a little over $1 billion in a 12-month span. And the total shares traded to that of a 3-month look back versus a 12-month is astronomical. Okay, but there's a whole lot more selling going on at Robinhood than there is buying. Now that's quite telling, okay, because of where the stock is right now. And if you are trying to spend your hard-earned dollars investing in Robinhood, you should want to know exactly what insiders are actually doing when it comes to Robinhood. We're going to take a quick look here. As we look here, it says these are officers here, and you can look at the shares that are traded here. Now, this particular individual right here, well, his name is Vat Baiju, okay? Well, who is Vat Baiju, okay? Well, that gentleman right there is one of the founders of Robinhood, okay? So he's an interesting person. And the reason why I say that is because, well, I kind of want to know, what is the founder of Robinhood actually doing? Well, as we can see here, that he sold 113 1,000 shares back on February. Well, it was an automatic sale. The question is it much to do about nothing? Okay, because these guys, they own hundreds of millions of shares. So maybe it was something that he already intended to do. Maybe it was, maybe it has nothing to do with where the share price is, because we can see here that the price was at $14 a share. But should the founder be selling shares of Robinhood at this low? You know, doesn't he have some hopes that the stock is going to go back to its highs? Or does he happen to know more, which is that, it's better to start selling now, because I don't anticipate the share price going any higher, or getting nowhere near its all-time highs. So these are the decisions right here that we need to make before we actually get in. And looking at this particular chart here and seeing how much selling has gone on here versus how much buying is taking place, the question is that is Robinhood a good investment? Why are insiders selling the stock, and why so many? Well, I think we probably answered the question to that. And let me just sort of say this. The reason why I say I think we've answered the question is because if the stock is down at its lowest, pretty much close to its 52-week low, that is all the reason, and all the more reason why someone would sell a stock. Okay, there is no promising catalyst out there that's pushing this stock forward. Okay, other than maybe a rumor. And most rumors, let's be honest. I mean, yeah, you may get a bounce. Be honest with you, that's kind of what I got. I got a bounce out of the stock, and I was able to, get a 30% return on my investment. But I was able to sell it, get out of there unharmed, unscathed, and make some money. Robinhood, to me, if you're asking my personal opinion, Robinhood is not a good investment. It's not a good investment long term. Okay, it depends on what your investment outlook is going to determine whether or not Robinhood is a good investment for you. What do I mean by that? Well, if you're asking me is Robinhood a good long-term investment? Well, what does long-term look like for you? Well, if you're telling me long-term for me is 5 years, I'll say Robinhood is going to be a good investment for you. Well, my long-term is 10 years. Robinhood's going to be a good investment for you. I believe if your long-term outlook is 6 months, 3 months, no, I do not think Robinhood can recover within that short amount of time in order to give you what you're looking for. Now, if you're telling me all I want to do is basically day trade this stock or swing trade this stock so I can get in and get out and make a few dollars, I think it's a wonderful opportunity. I just gave you a good example of how I was able to do just that, and basically get in and out of this stock, make a nice amount of money, a decent amount of money. Okay, and now I'm looking to pretty much get back in and do it all over again. The question here is that is it wise for me to jump back into Robinhood right now? Should I wait for it to go lower? These are all the questions right here that I hope that we've answered for you. I got my answer. My answer is that I'm going to get back into Robinhood because I believe that Robinhood is oversold. At this stage, I believe that Robinhood can go higher from where it is right now. Now, if I buy back in, or should I say when I buy back in, right? If it goes back to $15 or $16, I'm going to probably be either looking to put a stop loss in there, or I'll be monitoring the situation very closely to get out again because I don't trust the stock, right? Unless something changes drastically here where there's some huge announcement, that I can actually confirm that it's not just a rumor and the stock is bouncing off of some unconfirmed news, then I'm going to probably take my chances to get back in, and I'm going to continue to day trade or either swing trade. In this situation right here, I'll certainly be looking to swing trade Robinhood. Well, that's about all I have for you at this time. If indeed you liked anything or you got anything out of this video, please like and subscribe to my channel and support the Patreon, or become a Patreon member and support the channel. Thank you, and I'll see you in the next video.